Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on Friday, March 1st, back after a little soiree down to Florida with my kiddos. Not much has really changed when the top-down evidence. Most of it's still positive here over the last couple of weeks. The trends are up for the major indexes, short, intermediate term, and longer term. Most leading stocks are acting well. I would say a couple of things, I'd say two or three things actually, that I'm going to talk about in the video. One is, we did start to see some up, down action after a big run, which is usually a sign of distribution. It just means the buyers and sellers, as opposed to the sellers being swamped, right? The buyers and sellers are fighting it out a little bit, and that can mark a change in character. But I have to say, it seems like since NVIDIA's earnings, not that it's been straight up, but things kind of, the air might have been cleared, so to speak, after a couple of big shakeouts. So we'll look at that. Number two, we are seeing the things broaden out a little bit, not hugely, but we're seeing some, mid caps and equal weight indexes doing better. Okay. And number three, and most important to me, is the last couple of weeks has actually had a ton of earnings reports among some big firms, but a lot of, sort of secondary growth stocks, the glamour stocks, so to speak, that I tend to look at in a couple of my publications. And the reactions have been very good. Not all, one's getting hit today actually, but most of them that you look, it's like, wow, this looks good. And they look fresh. It's not like they've been running for 4 months and then gapped up, which is great, but it's kind of like, well, it's more of a hold than a buy. We're seeing some that could be actionable. So overall, I am bullish, certainly holding strong stocks and actually looking to put some money to work, but also kind of stock by stock basis and still being kind of selective on the buy side. The fact of the matter is we are 4 months into this rally. Doesn't mean it can't go on another 4 months. But at some point, we are going to get a pullback to the 50-day line. At some point, some of these leaders are going to correct and consolidate. I'm not saying to go sell them because of that or to instill fear, but you just want to keep your feet on the ground, okay? In Cabot Growth Investors Model Portfolio, we put a little bit of money to work yesterday. We took a little bit back out today. Again, something's getting hit. I would say, though, that if things kind of stay relatively intact, so to speak, in the next few days, I would be expecting to put some of that money to work. Not all of it, but like I said, I do see some opportunities here from some of these fresher names that have reacted well to earnings, okay? Let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. I'm not going to spend too much time on the indexes, except to say that, so here's the NASDAQ, and this is all short term. Intermediate term, it's really been no problem. We're still well above the 50-day line here for the NASDAQ, and really even the weakest index, I guess the small caps, which we'll look at, still above the 50-day line, still looking pretty good. Even that one's challenging its highs. What I would just say here is in the last 3 weeks, just to kind of drill down a little bit to the micro term, because I haven't talked to you in a couple of weeks here, you did start to see, like I said, here was a short but sharp hit of a few hundred points. Then we'd rallied back. Then we had another hit here for 3 days. And then this was NVIDIA's earnings report, this big gap up last Thursday, I think it was. And you can just see after that, yeah, there was a little wobbles or whatever, but it just was very, very tight in there. It was only a few days. I'm not trying to make it's the be all end all, but things did kind of come under control. So I do think for leaders, it's possible, obviously with the AI stuff especially, that I don't want to say the air has been completely cleared, like, oh, we had those two little selling waves and therefore we can go up another 6 months without any pullbacks. But I do wonder if short term the air was cleared a little bit in that sense, okay? So that's kind of a good thing, okay? The rest of the market, not as extreme as the NASDAQ, but you still had a couple of wobbles here. This is the S&P 500. Obviously, it's sitting here at new highs. We're extended to the upside, again, in time and price. I'm just telling you the risk is higher now, higher than it was, 2 months ago of some sort of real pullback or correction or whatever you want to call it. We haven't really seen too many signs of it yet, but, just good to be aware of it, okay? But just running through the indexes, New York Composite, strong. Like I said earlier, IWM, this is your weakest index, but even this is trying to challenge to kind of come out to new highs above the 50-day line. And MDY, same thing, okay? Even better to me, of course, is you look at some of the growth stuff, the ARK fund. This wasn't it. I'm sorry. I have the wrong thing in my head. Oh, IPO fund. This is what it was. Pretty deep correction to start the year. These are a lot of the names in these groups are more speculative. It's not like, I think the leading stocks. But even so, pretty big correction to start the year. And you can just see has really handled itself pretty well here, even with those shakeouts of late. The IBD 50 index, which is not updated through today, but this is as of yesterday. You can just see, tagged the 25-day line last week during the pre-NVIDIA sell-off, but has been holding up there pretty good. I would imagine it's up here somewhere today. And same thing with the mutual fund index and, so on and so forth. If you look at the semiconductors, obviously they remain very, very strong, but also, again, very extended. So that's number one, okay? Number two is just real quickly, I probably should have had this number one, but real quickly, you are seeing, this is RSP, which is the equal weight S&P 500. We talked about how, divergence or whatever you want to call it, most of the market wasn't really participating. If you looked at small caps, mid caps, even equal weight big caps, wasn't really going anywhere, where the S&P 500 and NASDAQ were doing well and the leaders were doing well. Now we're starting to see a little broadening. What does it mean? I don't know. I mean, sometimes you get a broadening and it's bad for leadership because there's a rotation, out of the leaders and into the stuff that's beaten down. We're not seeing that yet, obviously. We're just seeing kind of more buying pressures, including, like I said here, in the last week or two on some of these earnings moves, which I've been pretty impressed by. Usually it's kind of this time in a rally where, you get, and we have seen some air pockets, the earnings are good, but not good enough, and the stock gets really hit. We have seen some of that, but we've seen a lot really in the other direction too, okay? So that's pretty good. This is RSP, like I had shown earlier. This is MDY, kind of coming out to new, I don't think it's all-time highs for the mid-cap. It's hard to tell, but it's closing in on all-time highs, but certainly, more importantly, out to multi-month highs, okay? The other thing I just want to mention, back to kind of the first point where we're sticking up, just don't be afraid to take, I'm not sounding the warning sign, but don't be afraid to take partial profits. If you sat through the last 2 years, you went through a lot of, not just getting hit, but, stocks going up 10% and then they go right back down 15% sort of thing. Okay, so if you have some of these stocks and you did buy them right, this is Comfort Systems. I just pulled out some of these names that they've been either in top 10, been in top 10, things I'm watching, peers of other things we've recommended. But, you have a stock that's gone from, housing stock, 200 to 300 in a few weeks. Could it go to 400? I hope so. But, maybe you lay off some shares. I'm not saying this name in particular, but like MCore, this is EME. I mean, this looks great on a weekly chart. Just nice, big, beautiful base. And then you get whatever 4 or 5 weeks, including this week on earnings, just going absolutely bananas. I'm not saying I think it's going to come down here, but, it could easily wiggle around for a bit. So if you bought some and if you own some and had some right, take a little bit of stuff off. This is one we actually did just sell outright in top 10 today, taking a profit, but NTRA, maybe you hold some, maybe you sell some, hold some, whatever you want to do. But I'm just saying, don't go and sell all your best stocks. That's number one. But at the same time, be flexible. And if you bought something and you have a good sized position and it's been running for a while and it gaps up and you feel like a genius, throw some share, feed the ducks while they're quacking, so to speak. Just don't forget to do that. And then, there will be pullbacks along the way or other leaders that you can put that money into, so to speak. I'm not saying go sell your best stocks, all of them, but taking a little bit off here and there on a few names does make sense, okay? Okay, last and most important, going into individual stocks. What I have seen this week and I'll just say the last couple of weeks, this is Freshpet. Now this one's thinner. It does move around, but I mentioned this before. I am seeing names where you could say it's a laggard and now these are gapping. I tend to think that it's, it has this big bottoming formation. It builds a base. It really tightens up here for whatever, 6 or 7 weeks. And now it gaps up on earnings actually Monday morning. I think it reported before Monday morning, which was kind of weird. A new RP peak and all that sort of thing. So that looks pretty good to me. Freshpet FRPT. This is just one today. This is another thinner one. This is Sweet Green. It's one of these, we were following this way back with actually Dutch Brothers, if anyone remembers that one. Yeah, that one doesn't look so good. But Sweet Green SG was one of these like cookie cutter sort of restaurants, quick service too and all this stuff, kind of healthier eating, more in the city, so on and so forth. But anyway, it just got nailed in the bear market, but it built this sort of big, deep base here. You're kind of waiting for some of these as the growth story plays out to gain sponsorship. And maybe we'll see. Today could be the start of that big earnings gap so far today on Sweet Green, okay? Celsius, this one's well known here, but CELH, they opened it down a few points. The numbers were, kind of in line or a little bit better. I don't know. It was fine. It wasn't like some amazing thing. And then you look, a couple hours later and the stock's up $10, okay? So Celsius looks pretty good. It's not the first inning of this advance. It's not unknown, but it is one of these sort of the next Monster Energy sort of plays, and clearly they're buying it yesterday, okay? Hyatt Hotel, I mean, it's very broad. Hyatt Hotels, Hyatt. I mean, this is not a young growth stock, okay? It is smaller than Marriott and Hilton or whatever, but you can see just on the chart, you just look, it's not, it's not a dynamic performer, and really the stock did next to nothing for about a year, and then look at this, it hit new highs, and look at this on the weekly chart. You can barely see it. It's so tight. Now, of course, it's always somewhat tight. Like I said, it's not a super volatile stock, but then you just get 3 straight weeks of, huge volume buying, both after the shakeout, before and after earnings. So Hyatt, symbol H, obviously, well, not obviously, but preferably on pullbacks. Okay. Duolingo, this one is, this is hard to handle. We had it and got shaken out of it, just to be forthright with you. Okay. The weekly chart here, seemed to be, destined for greatness. The story, the numbers, the chart, huge volume buying, but it was not to be, and it pulled back something like 30%. But then it reports earnings, okay, and maybe this time it's ready to go. But it's still shy of its old high. But again, just a very, very big volume. So far, it's just one day, a few days up, I guess, but one big day. So let's just see how some of these handle itself. Maybe it just kind of chills out for a couple of weeks and sets up an entry, but we're seeing some of that. AXON Enterprise, this is like the new Taser, except a lot of their stuff now is, recurring revenue. I'd mentioned this back here. This, after you get this sort of obviously bear market decline, it did come all the way back, and then it kind of builds this more normal, albeit very long and tedious, consolidation that was, I'll tell you right now, 24% deep, which, really isn't that crazy or anything. A lot of smaller growth stocks did worse than that, during the correction last summer and fall. Tightened up here for the last couple of months and then busted out. This is what I'm saying. It's not like if we saw a lot of earnings gaps with stocks that, say the stock did what AXON did, and then it kind of did this, and then it got hit, and it's down here, and it's just a garbage company, and then it gaps up like this, 20%. I don't care. But this is, has been going up. The RP line hadn't quite hit a new high yet. Now it has. But, tight. It's been acting well. It's got the sales. It's got the earnings. It just hadn't really kicked into gear yet. And now we're seeing some of these do just that. So this looks pretty good around the $300 level. As always, could shake out a little bit. Looks pretty good. XPO wasn't an earning. It was an earnings winner 3 weeks ago, but we are starting to see some of these names. Some of them have gapped and kind of crapped. I shouldn't say that, but gapped and fallen apart. But XPO, nice gap, and the whole group remains strong here and just kind of tight in there. Shockwave, this is sort of a lower level structure. So this one is a little bit, it's not like I was saying before, but this one is sort of more of an off the bottom play. But you can see it's been trending higher here and popped on the daily chart on earnings a couple of weeks ago. And so far, you had the ups and downs. Of course, that was a lot of more technology, AI stuff, not medical. But even though it's been contained here in that 1 day range for the last couple weeks, 2 or 3 weeks, 2.5 weeks or whatever. So that's pretty good so far. Keeping a distant eye on it. Was a leader. Could it reemerge? Growth is still very good. So on and so forth. Okay. This week's storage, storage could be the next, not the next, but, AI needs more storage, right? So Pure Storage has been one of these things that originally tried to get going during the initial AI wave last March, April, May, that sort of thing. But really couldn't really get going. It got new highs, shook out, and then, went banana on earnings. You can see yesterday and then today, and sort of a loose peer, NetApp, NTAP. It's different, not growing as fast in general, but big earnings gap today. Light and Wonder, this is a gaming stock, not really technology or AI. Again, this is just some of these names that, like this one was in top 10 a few times last year. We did okay with it. But just kind of built a base in here. I wouldn't say it's a laggard when you look at the weekly chart. It's not sitting down here and just trying to get going. It's just been building a base after a pretty good run, and now it's broken out and really accelerating higher on a nice, volume cluster before and I think it was just after earnings here. No, before and after earnings, it looks like, into round number resistance at 100. And then just a couple more names. I know a lot of people ask me about, they don't ask me, but, they want to know about Amazon and, some of the big names. I will say Amazon gapped on earnings. Obviously, it wasn't in the last couple of weeks, but it's been holding up. Yes, it wiggles around, but, just look at that chart. It really hasn't moved much. And, the volume, there was no big selling. It's not like, okay, Amazon's up 10 points. sell half my position. I'm a big investor. I'm at Fidelity. Sell half my position in my fund. You didn't really see that happening, or if you did, you saw people, buying it up and hitting new highs. Netflix is another one that was just kind of, Apple doesn't look so good. Some of these are, a little tired, but this is one that gapped here. And again, just kind of nice and tight. Again, you get some nice follow-on buying, and then it pulls back, but there's no selling and out. So we are seeing some of the mega cap names that aren't just, AI chips look good. Okay, and last but not least, I'm keeping a distant eye on China. I always look at some of the groups that have growth, but the groups are acting terribly. So I've mentioned solar in the past. Sometimes oils, because they can move. When they move, they can move. Not that it's like a growth industry. But China stocks, just because everyone hates them, they're trying to get, find some support. And this is EDU. It's been in an uptrend for a while. Nice breakout here, big run, but just kind of had this a new base here for 2 months, breaking out on the upside. Earnings is out of the way. They reported that a couple of months ago or a month and a half ago, and looks pretty good. There are a couple other names in the Chinese space, but in case sentiment towards that group is so negative that if it does turn up, some of these could keep running. But anyway, back to it. I just think it's kind of a similar situation where you kind of have to have two thoughts at the same time. It's a bull market or an uptrend, whatever you want to call it. Not big into labels. It's an uptrend. You're making good money. A lot of stocks are acting well. A lot of stocks are acting really well. Leading stocks are acting well. It's kind of, everything's kind of going along as it should. At the same time, there is some froth. Sentiment, short-term sentiment or intermediate-term sentiment is elevated. I don't think big picture sentiment is elevated at all. But so, and we're extended in price, we're extended time-wise. So you just want to keep your feet on the ground, be selective on the buy side, I think. Take some partial profits here and there. Reward yourself for doing well. But at the same time, the big money's in the big swing. So if you do have a tiger by the tail, if you do have a really good leader, maybe take some partial profits, have your selling plan in place in case something really goes wrong. But give it a chance, because who knows? Maybe I think there's going to be a chance that some of these real leaders will be much higher, or at least higher, 2, 3, 6 months down the road, and possibly really add to your account. Okay, that's all the time I have for today. As always, thanks for listening, and come by again next week for another Cabot Weekly Review.